BNED has a decent amount of short interest. On Friday, the 19th, it closed at $9.33. Extrapolation is saying that it's going to, after Monday, after tomorrow, the 22nd, it's going to contracted expansion that began on Monday the 15th. No guarantee that that will be the case. Upper projections, let's see what we have. Do we have anything to the upside? 9.11. Nothing to the upside. It's a downward projection, 9.11. But before now, if we go as far back as the 18th of July, it had projections all the way towards 13.74, 13.3, 12.6, 9.87, 10.21, 10.77. Yeah. Underlying trend, I think, is surely is bearish. Price pressure momentums are, let's see, the stock was okay. Yeah, they are both in trend mode. However, it has the 10 this 10 and 21 day moving averages also have negative derivatives indicating that it has been facing some upward pressures. Let's have a look at the 4-hour chart. The extrapolation on the 4-hour chart is also saying that it's going to, yeah, this expansion is going to contract, but it may bottom by Wednesday the 24th. As a matter of fact, Tuesday, okay, well, Wednesday's pre-market session, that is Wednesday the 24th of September. Let's see what we have in terms of projections. It's also the sort of projections we've seen already. That this is as far back as the 9th of September. Indeed, there are. Yeah, I mean, the stock is in a bearish trend. Obviously, it has a record. It's not a new company. There's most certainly ample room to the upside. But looking at the projections as of the 27th of June, the highest was 12.60. Price pressure momentum is here. Everything is positive and bullish and trending, apart from the second derivative on its 21 period moving average. Okay, as far as there was some news. Okay, the company delayed its quarterly reporting amid auditing investigation. Okay, that may not be good news. That may not be good news, but this was as of the 12th of September. That was yeah, last some time. The stock may have already dusted off that, but there's more news about acquisition of Booking. Let's see what that's going to say. Let's see, it's coming up. Yeah. So while we wait for that, we can return to the daily chart. The bid by Barnes& Noble to acquire the assets of Books Inc. for $3.25 million signals a strategic shift for the national bookseller, which is now acting as a rescuer for struggling independent bookshops. This is the second such acquisition in 2 years, following Barnes& Noble's purchase of Colorado's tattered cover chain in 2024, which also emerged from bankruptcy. Motivations for the acquisition. Books Inc. filed for Chapter 11 bankruptcy in January 2025, citing steadily rising operating costs and changes in consumer habits, issues worsened by the COVID-19 pandemic. The acquisition by Barnes& Noble, if approved by the U.S. Bankruptcy Court for the Northern District of California, offers Books Inc. a lifeline for survival. According to Books Inc. CEO Andy Parham, the deal provides deep resources and world-class support that will help the company modernize its operations. For Barnes& Noble, which is owned by hedge fund Elliott Management, the move is part of a broader expansion strategy aimed at capturing more market share and capitalizing on a resurgence in the bookstore industry. Barnes& Noble plans to open 60 new stores in 2025, building on its expansion in 2024. A new strategy for Barnes& Noble. Under CEO James Daunt, Barnes& Noble has transformed its image from a big box competitor that once threatened independent bookstores into a modern retail operator that borrows strategies from indies. Daunt, who also runs the UK book chain Waterstones, previously owned an independent bookstore and has emphasized a more local, neighborhood focused approach. With the acquisition of Books Inc., Barnes& and Noble is attempting to preserve the indie spirit while bringing corporate resources to bear. Minimal changes. Daunt has pledged to maintain Books Inc.'s independent identity, brand name, and local control, even mentioning the possibility of expanding back into Berkeley under local management. Shared resources. Books Inc. will benefit from Barnes& and Noble's more modern distribution network, technology, and extensive operational support. Preserving legacies. This safe harbor approach prevents storied and rather remarkable bookstore chains from disappearing entirely, which Daunt views as a worthwhile effort. Impact on Books Inc. The proposed deal is a dramatic turn for the 174-year-old California institution, which was founded during the 1851 gold rush. The chain had previously navigated other periods of industry disruption and even filed for bankruptcy in the mid 1990s in response to competition from national chains like Barnes& and Noble itself. If the deal is approved, Books Inc. will continue to operate its 9 locations, down from 11 previously, including 7 neighborhood stores and 2 airport locations. In addition to preserving the Books Inc. brand, Barnes& and Noble plans to honor existing gift cards and transfer loyalty points to its own system. A changing bookselling landscape. The Barnes& and Noble acquisition reflects a larger shift in the book industry. While independent booksellers once saw the national chain as a major rival, the rise of Amazon has turned Barnes& and Noble into a potential ally and stabilizing force. A resurgent interest in reading, possibly spurred by social media communities like Book Talk, and the COVID-19 pandemic, is also credited with bolstering brick-and-mortar sales. By acquiring and rejuvenating iconic local chains, Barnes& and Noble is positioning itself at the forefront of this new, revitalized market.
Okay, so thank you very much for watching this video.